Medical Properties Trust is a real estate investment trust. They own properties and rent them out to hospitals. And these hospitals could be nonprofits, they could be cities, governments, and so forth. I happen to think that healthcare should be a stable industry where no matter if we're in a good economy or a bad economy, people need healthcare and they need to go to hospitals and get treated when they get sick or if they're in an automobile accident and so forth. Therefore, I'm interested in real estate investment trusts, and I'm interested in trusts like the one that Medical Properties Trust operates. This particular one has a lot of issues going on. The stock price is down 40% year to date. The dividend on this stock is 15.5%. Wow, that's an attractive dividend, and they can afford to pay it. There's a high number of shareholders that have shorted the stock. 20% of shares have been shorted. So there is a lot of eyeballs on Medical Properties Trust these days. And I wanted to analyze the company and see if it's a good investment or a bad one. My name is Victor. I have an MBA and a lot of business experience, and I like analyzing companies and sharing my analysis on YouTube. Do me a big favor and like my video and subscribe to my channel. That'd really help me out a lot. Now, let me tell you more about Medical Properties Trust. I have a process I like to follow when I evaluate a real estate investment trust. That process has 4 key questions that lead me to a decision whether I should buy, hold, or sell a particular company. First, is this a company I want to own? Do I like the industry that this REIT operates in? Is the company operating and performing well? And this is really great on the management team. Is a dividend payout less than 80% of funds from operations? And I want a discount on the stock. That way I can get really nice appreciation in my investment in a particular stock. Based on the answers to those questions, I buy, hold, or sell. So what's the story on Medical Properties Trust? Well, they own properties that they lease out to hospitals. That's pretty easy to get your head around. And they own a lot of facilities. Some of the most recognizable hospitals in certain regions lease their space from this real estate investment trust. And that's easy to get your head around. What is more complicated is how they've gotten themselves into some financial trouble. And it really starts with one big tenant they have. And that tenant became financially strapped. They couldn't make their payments. And therefore that created a financial problem for Medical Properties Trust. And the company's trying to get through that issue and get beyond it. It has been difficult. It's taken a lot of time and energy for the real estate investment trust to get through it. And it's created, I think, a bad situation for the company since their credit rating took a hit. Their financials continue to take a hit, both on the profit of the company. And it's really had a lot of short sellers come into the stock as well. So just a lot of things are happening in this real estate investment trust. I will end by saying that this company owns a lot of properties that are very valuable. They also serve an industry that's very stable. So I do like that the rents are going to be paid on most of these properties. And I would bet that this real estate investment trust is going to be okay well into the future. But they do have some significant business problems today that they need to deal with. So the company released their financials, and I wanted to take a look at their income statement first. They did operate with a loss in the most recent quarter, and that loss was primarily driven because they had to accelerate amortization on a property they sold. So I think those types of losses are going to be one-time effects. I think future quarters will return to profitability. A year prior, they're really profitable, so that's good to see. If they can return to that level, I think they're going to be fine. Their funds from operation more than cover their dividend, so that was very good to see. For a real estate investment trust, you really have to watch funds from operations and see that the company can afford the dividend they're paying. Real estate investment trust, the principal return to the investor is that dividend. So we got to really watch that carefully. And if we look at the dividend, they pay 29 cents per quarter per share. Funds from operation in Q2 are 48 cents. So that more than covers it. If we look at Q2, it was a 60% payout of their funds from operations that were used for the dividend. If we look at for the year-to-date number, it's 76% for the year-to-date number for 2023. So that's below my 80% payout ratio. So the company could afford that dividend. And they accelerated. The reason they had a loss again is they had to accelerate amortization of a lease intangible. And I think it's related to that bad lease they have with one tenant. So they just got to get that one bad tenant through their system, off their financials, and then they can return to normal financial statements that show that the company's been profitable for many years and they generate a lot of free cash. The cash balance for the company has increased. So that's really good to see. When times are tough, it's good that they have plenty of cash and they're growing their cash actually. So it's good to see that. Everything else remained fairly stable. I believe that MPW is discounted by 58%. I believe their stock really has a value of $10.93, but right now you can buy shares at $6.93. What's the big delta? What's the big reason? I'm going to value MPW based on two different valuations. First, I'm going to value that dividend and discount that dividend and achieve a value for the company based on that dividend. And second, I'm going to take the earnings per share and try to get to a value based on the earnings per share that we expect from the company. So first, the dividend, they can more than afford it. They're paying out 76% of their funds from operations toward that dividend. And the dividend annually is $1.16 per share. When I take that through the valuation of the dividend, which is right here, I get to a value per share of $16.57, but the stock is currently trading at $6.93. So just based on the dividend, it offers 139% discount on the stock. The earnings per share is pretty low compared to previous years at 35 cents a share. A normal PE for a REIT, and I think this is a low PE for a REIT that can be much higher, like 24, hitting it with a 16 price to earnings ratio. I get a value of the stock of $5.29. So if I take the earnings per share value method, you'd be buying the stock at a slight premium of 24%. When I combine the two, just equally combining the two and getting to an average, I get 58%. This is the number that if the company really continues to repair the problems that they have and they get back to what they were doing 2 years ago, there's no reason why this stock can't double very quickly, like in a year or two, but they have to repair the business. So let me take Medical Properties Trust through my scorecard. First, I like the company. I like the properties they own. I like the industry they operate in, which is hospitals and healthcare institutions. I think it's pretty stable. It should be a very good business. I cannot give management, a passing grade. Obviously, they got into some trouble. Somehow they leased out to a very big institution, and then that institution hasn't been able to pay their lease. So that created a lot of problems. So they got to get that through their systems and get them off the books in order to come back to a profitable, stable company. So for now, no passing grade to management. Their payout of their high dividend, 15.5%, they can afford it, which is very good and very impressive. And there is a significant discount on the stock. I own shares of Medical Properties Trust. I'm going to hold those shares. And I'm going to keep tracking to see if they're repairing these problems they have. If I could see that, the problems are getting behind them, I'm going to buy more shares because I think this stock can double or triple very quickly. And they're paying a 15.5% dividend. So looking at the stock for the past year where the price has gone, you can see that they have gone down, over the course of a year. It's been a big drop, about 80% of its value. But I've made a lot of money on companies that I thought, the market was treating them maybe inaccurately, and I bought them at a very discounted price and then saw them rise. I think this may be that type of stock, but we'll see. We'll need a quarter or two to see how they repair their business. Right now, the stocks are trading at $6.93. I value the company more around $10.93. So if they can just get those problems solved, they can get there. They had a really nice run over the course of like 2 months, and they almost got to that value that I have on the company. And then they dropped because they were trying to work out a new lease to a new tenant, and somehow that lease didn't get inked, and that surprise really scared the market. So over the last 3 weeks, a lot of stocks have lost value, including MPW. So that's been going on. There's a lot of short sellers on this stock, and there was a squeeze. I believe part of this rise that we saw was a squeeze on the short sellers. I think this could get squeezed again, because even if this company has hard assets, they own properties, they own real estate. That real estate generates income, and it's going to be it would take a lot for a company like this to go bankrupt. Therefore, I think it's a good stock to bet on. I just want to see this management team work their way out of these problems a little bit more. The stock year to date is down 40%, and they pay a 15.5% dividend. I've said it a few times, they can afford to pay that dividend. So that's a pretty high dividend to be paid on, which is pretty attractive. And that's my video on Medical Properties Trust. Obviously, this is a riskier investment. This is one where I really got to study the company and make sure that, I'm making the right bet on this company. I don't have a lot of shares on this company, but it is really interesting to me. I think as soon as I see the coast is clear on this company, I'm going to buy more shares, more significant number of shares, because I think they're just going to bounce back, and I could quickly double or triple my money if I catch it at the right time. Thanks so much for watching the video. Do me a big favor and like the video and subscribe to my channel. That'd be a big help. And with that, let me wish you the best of success in investing in 2023.